Okay, sweet. So just jumping into it again a little bit late, just due to yeah, it's been a little bit crook really. So obviously better to get these sort of reviews done a little bit earlier, but yeah, it's got to work with what we've got at the moment. But realistically, at the moment, it's it's just a frustrating sort of little market to trade because we just, as you can see, we start off with Aussie. We're just in this tight little range here. I mean, this is realistically, yes, you got a couple of wicks. This is the NFP, ISM kind of stuff from back here. But that was last Friday. Excuse me. So throughout this whole week, this is a 50-point range at the best of times. And then realistically, going through yesterday, that's 29, well, let's call 30-point range. And it's just churning along. So it's very, very frustrating. I mean, look, it's not too bad for my style of trading because I'm an in and out trader and I'll go in and out over and over. So range trading's generally not too bad for me. Like, you know what I mean? I can certainly sort of make some money in these areas and that, but when you've got an overall big picture consensus, which is basically this rounded bottom coming through here, you want to see these breaks. And when it goes up like this and then just falls over, goes up like this, falls over, it's frustrating. I think that's the best way to put it. But the way that I view these things as well is like, when it is frustrating, like one, you know that it's going to be like this. When you've got large prints coming up, I mean, we had Aussie CPI, which I'll get onto in a moment, and that, but well, the aftermath of, but I mean, when you've got big things like FOMC or CPI, US top tier data releases, market's always going to be subdued. You're not going to get. There's no reason to see these large breakouts, so it's not a shock sort of kind of thing with it all, but. Certainly it's just sort of like it's frustrating when you're like, come on, just make a move, and then it's up, and bang, it falls over again. So you want to be able to get onto these little runners when you can, but the fact that it hasn't isn't really sort of a bit of a shock. We are seeing a little bit of a push up early today, obviously. So we had Aussie data out just before it was it was the trade balance, I think. So I'll flip across to this one here. Yeah, so Aussie goods trade balance kind of thing, which it looks like it was revised up to 7.6. We're expecting a bit of a push down, but not only did it not push down, but it absolutely thumped to the top side. So that's a big, big miss. Sometimes you wonder, sort of like, who are these economists or the people that are making these predictions? Because, not only have you got it the wrong direction, but you've just sort of like you've got nowhere near the mark, kind of thing. It's 40% off or so. So yeah, certainly a decent little push for Aussie off the back of that. And as we can see, it's coming up here now. Actually, just before turning on. Generally, it's sort of when I make these vids are about the first time that I've had a look at the charts, but because obviously it's little bit later. I just had a quick look just before I switched this one on, and I sort of drew in this new line that would seem to be this falling resistance that we've got inside this larger channel overall structure that we've got sort of going on here with the Aussie. But this one's for me validating because I mean, look at how many times it's respected this line here, and we're seeing it yet one small time here. If we drag this back, oh, not this one here. How does this drag back? I mean, you can even sort of say it's got a fifth touch up over here, really. So yeah, certainly it sort of seems to be grinding down into this little point here, which is, as I said, sort of coming into this is where US CPI is this tonight. No, yeah, this is because it's a 4 hour candle here. That's why it sort of links it together. But yeah, you can see here how well the market is respecting this bit, and it's just coming into this little pinch, 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 pinch. We're coming up along the top side here. So look, I think a break above here, you got to respect that. You got to sort of look at it and go, okay, well, is that going to do something? But again, you've got this sort of 67.30 line, which I feel is, if we look at the horizontal, you can see that this has also been respected quite a number of times, even just in this zone here. So, even if we do get a break above this line here, I think, as I've marked out with this sort of stuff here, I think that 67.30 is going to be a little bit of a tough nut to crack as well, because you've also got potentially this larger falling resistance to contend with here, and that's what gives you that confluence. You got anybody that's trying to sell on this line, they're going to be coming in and trying to sell it, or people sort of buying, sort of looking to take profit through this area. likewise with the sort of falling resistance here, these things don't break first time. It doesn't mean that they're necessarily going to hold, but it means that you are going to see a reaction. So the reaction could just sort of be something along the lines of this. Could go up to here, come back down, test top side of this falling resistance here, and then springboard off like this. I mean, there's any number of possibilities of how the market decides to price and react to this kind of stuff. Excuse me. But I think sort of certainly I can't see any sort of reason why the market's going to give these larger breakout moves prior to CPI. And US CPI is tipped to come in a touch higher, 3.1% previously, so 3.2% is the expectation, so up 0.1%. So with that, again, textbook response would be probably a little bit of a sort of firming up and a tightening of US dollar in that sort of scenario, because it means that they are sort of, the Fed are really sort of talking rate cuts. Like, as I say, I'll get onto Aussie in 2 seconds with the CPI, but the Fed are having the conversation of rate cuts, and the question with it isn't if they are going to, it's when are they going to, how much are they going to. So there definitely leaps and bounds ahead of the RBA with this kind of stuff. But if you get this sort of sticky inflation, like if inflation goes up, if it sort of hangs around this 3.1, 3.2 level, then it just means that the conversation then goes to sort of, let's maybe hold off on the idea of doing the rate cuts till a little while later, which, if you sort of extrapolate that out, will firm up the US dollar and sort of make things a little bit more difficult. But on the flip side of that is, what if it comes in at 2.8 or 2.9? Something with a two handle will go, yeah, that's it, confirmed, rate cuts, they're coming sooner rather than later. And the way that the FX market works, people will leave the US dollar in that respect, and you'll see your Aussie break out, you'll see gold push back up. So what I mean, there's no guarantee with these things, of course, and that's why you don't see major breakouts prior to the news. People have got their positions, but they're not sort of just like, let's just give it a good shot. Like, I'm not talking about you or me trading. I'm talking about the large institutions with a ridiculous amount of money. They're not sort of hedging this stuff on too much of a bet. They sort of are going to go, okay, look, this is what we think is going to happen, and they'll wait to see the news, and then they'll either cut their positions because they were wrong, or hold the positions because they're right, whatever. But I don't think they're going to be taking these wild swings, which are basically the breakout moves, prior to actually having confirmation of what's going to be coming, which is the CPI, obviously, tonight at 12:30 for our sort of local time. Just quickly on Aussie CPI though, we saw that yesterday the reaction was like a sort of dip for a second, and then sort of obviously pushed back up, and it was this slow grind. As I said, this is in a very sort of tight range overall, but certainly the reaction is opposite to what your textbook thing was. And this is fun because I was talking to somebody about this earlier, and my feeling is that sort of like, it's like sort of somebody that's, they're coming to a race, and, they do a great trading session, like, 8 hours and that the day before the race. And then they want a pat on the back. It's like, you're months behind the other central banks. You're months behind the people that have been doing all the training and getting the actual results and that. Yes, they came down 0.6%, and that in itself is, a massive drop off. But you're still over 2 times the target. You're still sort of 50% higher than, or not 50%, you're probably about 30% higher than, the Fed, for instance, or, I think sort of Bank of Canada has been down in the 2% for a while. These other large economies that are sort of, battling to get into the twos. We're sort of like going, hey, look, give us a pat on the back on that because we got it down to 4.3. Hey, yeah, and now you turn on the TV and everyone's like, oh yeah, rate cuts are coming, probably in June. Look, I'm sorry, but I doubt that. I highly, highly doubt that. What's going to happen if they put rate cuts in that while you're still around 4%? People people that don't understand or don't have their finger on the button with these things here, rate cuts on the news, and they go, oh, that's great. I can borrow more. I can borrow heaps. they'll do that, and that's just going to exacerbate and prolong the problem. So I would very much doubt that we're going to be getting rate cuts anytime soon. Now, if we can get down into the sort of low threes, maybe then, because you look at it, that's where the Fed's at. They're at 3.2, 3.1%, and they're talking about rate cuts. They weren't talking about rate cuts at 4.5% or 4.9% or 4.3% of whatever we are at now. So I very much doubt that we're going to be getting any rate cuts anytime soon. And I think that's why we saw the market push up a little bit yesterday, because you're still two times the target. And as much as sort of they say, oh, your carrots and your lettuce are maybe getting a little bit cheaper, that's just a drop in the bucket compared to sort of your housing markets. And I know the RBA said that they're not directly involved with the housing market, but you need to take that into account, because that's a lot of injection of cash into the economy. Not everybody's paying off a loan or downsizing and just having one house and moving from one house to the next. If you've got multiple houses and it's gone up sort of 30-40%, you're selling that house, you're taking that profit, and what are you doing? You're going out and you're spending it in the economy, and that's what's going to sort of push on inflation. So, while you've still got these people making vast amounts on these sort of investment properties that aren't just being sort of moved from one house or one property to another, one investment to another, you're going to see it sort of, still remain quite sticky, in my opinion, anyway. Anyway, so look, back to the chart, enough of all that kind of stuff. I think, look, we've broken through this little sort of midway support resistance level that we had sort of, as you can see, it sort of runs through the middle here. It's just been oscillating around this. We're through here. If we can get through this falling resistance, which obviously seems to be the market's looking at as well, I would say 67.30s, yeah, sort of your top end for the moment, and then probably a push back down into 15s. Again, I'm not expecting much prior to CPI. All right, flip across. Let's keep moving on. So I've got DXY. So DXY last night really looked like it was trying to come out of this top level here. You can see that I sort of built this little, I guess you call it like a little structure, but clean this up a little bit here. This was through the measured move of this little sort of double top, triple top sort of thing through here. And as you can see, bang, built it down all the way through here. And this seems to be sort of working out quite well, because it obviously provided a little bit of a target short term, which is basically the height of this down to the bottom here, played out to the bottom here. And that obviously saw a little bit of a bounce rally up, tried to come through again, and then smacked down. Then sort of just drifted along sideways through the end of sort of US session. And this morning's gap down is obviously finding support at that sort of third level down the bottom here. So I wouldn't sort of continue and say this is going to keep on running down forever, but this is the first sort of measured move that I was looking at, and I just put the third one on there to see if the relevance does sort of play out, and it does seem to be somewhat sort of market reacting from this here. You could also say that this is coming across to a little bit of a sort of support level just across over here as well. So I think a breakdown underneath this zone will pretty much sort of be confirming that we'll come down and test the bottom side over here. But again, you're not going to see, in my opinion, any major breaks prior to CPI. So all we can do is really just sort of wait on it, see what happens. There's a good chance as well, like we're looking pretty overbought here, oversold. This is on the 1 hour, that we could see a little bit of a rally up, and at least at minimum try and close this gap. But you can see the sort of just the up, down, up, down, up, down. This is what's creating just such a frustrating sort of a lot of price action across the market with a lot of these things. So yeah, look for a little bit of a breakdown underneath this place here. So I'll call this an intraday break lower. This will give Aussie a bit of a push up to its 67.30 if we can take out this level. And then, yeah, we'll move on from there. So just across to gold. Gold, again, frustrating. Put on this one here because this is the one we've been talking about, this 40 line. Came up and tested it again last night. Actually, sort of, I got a couple off over on this one the other night. And I was like, oh, yep, beautiful. This time they got me under. I got back in down here just under this little sort of fake out move. And I was like, that's great. Look at this timing. Boom, boom, boom. I'll hold this one because this is the one that they sort of stuffed everybody on. This one is the one that they'll run. and what happened? Boom, and I got stopped out. So yeah, that was a little bit sort of frustrating. But my style is very much sort of in and out kind of stuff. So when I try to hold these things and they don't work out, I'm always like, just stick to what you know, because you know what I mean. That was a little bit, wasn't a massive position in that because, as I said, look, what I mean, we're trading against the main trend here, so I don't want to go too heavy with these things, but still, any profit's good profit for. So yeah, it's a little bit frustrating that we didn't sort of lock that in, but that's life. So maybe we could see a little bit of a sort of channel forming through here. I think sort of if we can get through these levels here now, so we've got a little bit of this sort of midway range here at 2030. Again, 2040 I'm pretty sort of skeptical on, but it does take you outside this sort of falling resistance. So again, 2040, if we can get above that, we'll be doing something. But as I've said over and over, I'm not expecting much or anything substantial prior to tonight's moves. So I think sort of like tonight's moves are kind of like, I might do another video just prior to and just pick out some actual targets to sort of see how the rest of Asia and Europe sort of play it. Europe's been a really boring session recently as well. I've noticed it's just offering nothing really. You get a little bit on London Open and then it's just crap grind sideways kind of junk. But yeah, anyway, I mean, we're starting to see a little bit. I mean, this is technically a higher low if I can sort of pull on with this, but so we're starting to see a little bit more of a sort of sideways hustle. But 2040 obviously is the line for it to beat. Above this, we've got sort of 2050, and then we can start to look at the sort of wick highs from the NFP and all this kind of stuff. But certainly at the moment, it's trying to bottom. We've got a lower high as the first step. Through this falling resistance is the next step. And then we've got these little horizontals to sort of deal with. Copper, we can see the sort of move on copper. And again, this goes to the frustration. So you can see where I was sort of drawing it out yesterday. And it played out pretty much as I sort of said. Look, I mean, obviously, this came here and then sort of came here, then went down, and then obviously we've pushed up again. But the idea was generally, as I said, I don't do necessarily time sort of things. I just sort of say that, look, this is probably what we're going to see up into this bottom zone here, an under test of this horizontal, and then a push down, and that's what we got. And it's obviously just sort of happened to sort of bounce back up again. So it'll be interesting now because it's coming into the top side of this sort of channel down here. I think it looks a bit better on the 4 hour. Yeah, if you can sort of see this coming through here, a breakthrough here is what I'm looking for. If we can sort of, a bit of a back test and then sort of a push forward, because that'll give a back test to the top side of this falling resistance, and also back into this little horizontal support, which we can see, has played its part here. It's played its part here. Hopefully, if we can get back up on the top of it, it can come back down, play its part again as a support, and then sort of push back on over here. Everything's on the CPI tonight, I think, so we're not sort of looking for too much till then. China, as you can see, this is why we scored the Great China Grind, because it's just realistically gets to the top end and bang, it sells down. It's the same thing every time. Well, not every time, sorry, I shouldn't say that. I'm getting a little bit ahead of myself, but it was the same thing all through this area. When we're trading the top here, it's just in a grind. It's a sideways, it's just leveled down where it cut through quite cleanly, and now it's just grinding along in this new little range here. I'm still looking for downsides with China, with the yuan. Well, actually, sort of, I guess, yuan strength, but with this cross. So pushing to the downside here, we're overbought. This is back onto the daily now. We're overbought. We broke that yesterday's bottom wick of that little doji at the top of the range. First target is just, again, probably still just this same sort of price target down here. But if we can get down under here, then, we've got some decent little targets down much further. But, I mean, sub 7 is what I'm looking for first off. And then, obviously we can play here. These aren't sort of short-term targets. These are, obviously this will be sort of coming probably more over this way a little bit. But that's all right. We'll get to that when we get to that. But for now, it's still in that sort of sideways grind. We're tipping down from the top side. We're overbought. I'd expect this to push through and carry down to the bottom side here. All right, cool. That's about it from me.